What is going on, everybody? Welcome to this episode of Wealth Workshop. I'm joined, like usual, with Jacob. I'm down in Arizona with my family. Right now, we're enjoying the heat. Jacob's up in North Dakota holding down the fort. Jacob, we've got a great show going on. What are we going to be talking about today?
Well, I think, there's some big news that came out. I think policy-wise, Jackson Hole, Jerome Powell and the Federal Reserve were,
That's right.
talking up what they were going to do in the September meeting here. And then, out of nowhere almost, the Trump administration buys a 10% stake of Intel.
That is so crazy. I'm not
And then we've
surprised
got
by that,
some,
but I'm surprised.
yeah, and then you've got a good article coming out on Thursday on AI, which kind of ties into a couple of things that I was reading about this week.
Totally. All right. Well, I'm like quasi on vacation this week. So enlighten me on what's going on with Intel.
Well, first, did you hear about this?
Yeah, totally.
Yeah. So there was a headline on CNBC that was like, Trump administration buys a 10% stake in Intel. Now, it's not that's been like kind of like in progress, I think, for a while, where they've been like trying to groom Intel into like you're going to be the United States chip manufacturer. We want to get away from China and Taiwan. Taiwan Semiconductor. I'm pretty sure the founders are trying to like relocate to the United States and build chip fabs here. It's just been a
Mm-hmm.
big lift for them. Um, it's a little odd to see like the American public, like the federal government, take a stake in a privately traded company. I'm not sure how I feel about that. How do you feel about
Yeah.
that?
I think it's I understand why they're doing it, but if you look at the history, even like the recent history of like what this means for investor, right? So let's say you've got a 401k, got a couple million bucks in a brokerage account, whatever. Like let's say like somebody's an actual, not an actual, is an investor, and you think about like what like in COVID, for example, the government just flooded the markets with trillions of dollars of stimulus. Okay, well that was funded by government debt, right? And then now you have the government, fast forward whatever 5.5 years, actually buying equity in publicly traded companies. I mean, this is getting into some, I think some pretty funky territory. Now, I understand it, right? Like, I philosophically understand why they're doing it. I just think, this is like the skeptic in me of like, okay, so if they buy this company, if they buy 10% stake in Intel, like, what else are they going to buy into?
Mhm.
It's just weird that
Well,
they actually own it.
it's not the first time that they've done this, right? I think what was it, Fannie Mae and Freddie
Yeah.
Mac were both private companies, and the U.S. government took them over in the 2008 financial crisis. And I mean, for public good, right? Because like these guys were on the hooks for all these mortgages that were issued, and that's a little different. This is somewhat similar, where I think like the direction they're taking it is like we want to protect US jobs. We want to bring US jobs back here, semiconductor manufacturing jobs, designer jobs, whatever. Um, so I see maybe some of like the angle and how it's similar to previous cases of like the government taking equity stakes in these types of institutions. This is like quasi like outside of that realm though, because I think this is also like in the investment of the sovereign wealth fund. So like a
Hmm.
fund set up for public interest as well.
Have you seen anything else on the sovereign wealth fund idea that Trump wants to do?
Not necessarily. It's been a long time since I think Scott Bessent has really talked about it.
Okay.
I think it's hit the wayside. I know that like at a time it was really being talked up around like the Social Security Administration and how basically to invest public dollars within that organization better would
Yeah.
maybe be some seed capital for starting it. And there was an interesting take that I'd heard that was like the Social Security Administration was set up in the 30s after the Great Depression as a way to help people out, but that also helped the government out by basically buying U.S. debt, and it
Hmm.
just never changed. So the entire books of the Social Security Administration is just in Treasury bonds and notes and bills. But if they had actually chosen to invest in like the S&P 500, for instance, like it would be 28% of the global market cap, which would
Yeah.
be insane. Anyway, so like there's like I see like some of the benefit there.
Yeah, I do as well. Although it is weird. Like I was reading this morning, just in preparation for the show here, that Norway, the Norwegian Sovereign Wealth Fund, is divesting of Caterpillar because there's Caterpillar equipment working in the Gaza Strip.
Hmm.
And it's very like I'm not going to make a political statement here. Just my thought was like, interesting. Like there was like an event happened in the world far away and like an extremely hot part of the world for many different reasons, and then you had the Norwegian sovereign wealth fund be like, we don't agree with that, so we're going to divest from the position. It is just weird when governments who have access to basically unlimited money, like truly unlimited money, gets into the investing game. So
Hmm. Yeah, yeah. The Norwegians have been doing it for a long time. I think their sovereign wealth fund, what
mhm.
is it, like $4.5 trillion?
Yeah,
At
and
this
I
point,
think
they
they
almost
own
have to
like
invest in anything.
I think they own like, gosh, what do they own like one, don't quote me on this, but like one or 1.5% of like all publicly traded companies. Like it is astonishingly how big they are. But you can either own equity or um, uh, debt, and the government's loaned companies, historically loaned companies money for bailouts, but they taking an equity stake. It's uh, it's just different, right? It's just philosophically different, and I would imagine this is just like the direction where we're headed. Like I would assume this is like the precedent.
Yeah. What do you think is going to happen to Intel? Because like I don't know, the government spends a lot of money, and like I don't know what kind of a stake this is, but I don't know, it could be a little concerning being like an Intel investor and a company or the like a entity, the public, like taking a stake like that. Yeah, I don't know.
So here's my thought. So I've never actually told you this. So a week and a half ago, there's a big influencer. I'm not going to name his name because I don't. It's not really relevant to what we're talking about here. Um, he had this like big online event where he was selling a book, and he ended up like packaging this book with a bunch of other courses and whatnot. But inside of this offer that this gentleman had, he had an AI model that he trained on his own using his like methodologies for business. And so many people were really excited about this, and this guy was really talking it up. But I was like, I'm assuming he's going to get just all of the data as part of like the deal. Like he's going to like see all these conversations with people. So, you know
Hmm.
what,
Hmm.
I think like, even with the stake in Intel, like are they going to be watching? I don't think this would be the case, right? But like just like the personal privacy of just like how it's being completely eroded away with just with ChatGPT. I mean, they know, and like Facebook, and we've never really had privacy on the internet, like truly. It's been in the hands of like Google, for example. Meta has an incredible amount of information about everyone. Apple, when you think about like iMessages, and yes, it's like they say it's they don't access this and whatnot, but I'm like, well, you're texting things. I don't know. Uh,
Don't be so
so
sure. Yeah.
yeah, don't be so sure. So that's what's weird. That's the thing that gets me is, and this isn't necessarily about like what will happen to Intel, but when you asked that question, I was just thinking about the personal privacy and like how that's being eroded, and but what it means from like from an investing perspective, I think when companies have like unique ownership structures, if they do just like, I'm thinking about Porsche. I think as Porsche has a really weird, like the family owns, like it's owned by a
Oh,
the
sure. The
family,
Yeah,
and
the Porsche family. Yeah.
yeah, and it just like you would think on paper, like particular what was happening to the Porsches in the just with how much they were increasing prices, the profit per car, um you'd think it would be a really good investment, but they just the ownership structure was weird, and that affected that affected
More so because investors were spooked by
performance.
just like what could happen.
Yeah, because of the control. Yeah, because
Yeah,
could you imagine
yeah.
if like the Trump administration, wanted to be like an air quotes activist investor here, which they basically are.
And they
Um,
can be at 10%. I mean, that's a lot. That's a
yeah,
huge position.
totally. Yeah, what they could do to the company. So
Yeah,
it is
influence
a little
capital
goofy.
decisions. Yeah,
Yeah,
hiring decisions. Yeah,
yeah,
it.
it's
Yeah.
weird.
Well, we get Nvidia earnings on Wednesday. I mean, I doubt that they're going to say anything about this, but who knows? It'll be also just I know that's like a huge story of this week. Okay, well, so and also policy decision. I think the Jackson Hole event was fairly uh, well well received. Friday, I think the markets were up 1.5%. S&P
Okay.
was up 1.5%. It was a
Wow.
big day because Jerome Powell basically opened the door to rate cuts in the September meeting, which I think
Okay.
had all but people thought that he was going to make a political stance and say, hey, we're sticking to our guns. We're not cutting rates. The Trump administration had been wanting them to cut rates for some time now, and he's just not doing it. So that's what people thought that was going to happen. And he
Yeah.
basically came out and was like, hey, the employment market is softening, inflation's close to where we want it to be. There's an opportunity for us to cut rates in the September meeting. Not exactly
Mhm.
like that, but could be something there. um and I think like maybe let's just talk about like why this actually matters, because
Yeah.
the Fed rates matters a lot to banks, not quite as much to individual people directly.
So what happened to the treasury markets on Friday?
uh,
Do you know?
you No, but I assume that the rates went down.
See, I just checked, and the treasury yields are up today, which
Up to
is
date. Well, it's
interesting.
Tuesday. It's Tuesday today. What do you
Yeah,
have 5 day on it?
I don't. See, that's what's weird is like there's been a lot of hoopla about the short-term rates, but the long-term rates are staying like high. The I think what people, you know, so much about like what Trump wants to do is to fix the housing problem, I
Yeah.
think. He's like a real estate guy. I think it's so helpful to remember that Trump's a real estate guy, and like the art of the deal and all of his, he's just like he's a real estate guy. His the portfolio of assets that him and his family are building right now are just like way beyond just real estate, right? Um, but at the core of like what he knows, what he spent his career doing, it's real estate. And at the same time, it's just it's the housing market in the United States is I don't want to say broken necessarily, but these high
It's locked
mortgage
up.
rates, it's just totally locked up. That means that people have equity in their homes, of course, but it's like when we're working with clients, if somebody's trying to buy a new home and they're using a mortgage, it's just brutal, right? And there's people who are there. There's a sliver of the segment that of the market that can just pay cash or just have huge incomes to be able to do this, to buy homes, or they're sitting on the equity and they're like, sweet, we've got a lot of equity in our home, but like, what if we need to buy another house, or if our family needs to move? Um, the housing market is like totally locked up.
Yeah, an interesting take that I'd heard that I actually think is somewhat true was that the mortgage rate market, banks are keeping those rates high when they're underwriting these deals because of the perceived prepayment risk that could happen when interest rates fall. So they're trying to what they're basically trying to do is they're trying to like, okay, well, we know that we're going to have this prepayment drag on income. So we're going to try to front load that in the beginning by issuing higher rates now. And when that happens, everybody's going to refinance because it's if mortgage rates fall by 2%, they're going to have a wave of refinances. But we'll have already collected the interest that we would have to basically cover this. So like
Interesting.
what could happen here is like Fed cuts rates, the spread between the treasury, like a 30-year treasury and a 30-year mortgage, starts to come back down to normal levels. Because right now it's high. Like it should not be at
Yeah.
2.5%. It should be more like 1.7, 2%, something like that. So there's like
Hmm.
there's room for like 0.8% to 0.5% of room to like come down on the mortgage rate market. Um, what needs to happen first is those short-term rates need to fall. The rest of the long-term market needs to fall for that to really take place, for the banks to have confidence in issuing those lower interest rates on the mortgages, which would free up a lot of money inside of the housing market.
Yeah. I spend I think this was something my dad taught me, like, why is, we people talk about mortgage rates so much. People talk about housing so much. And, I've spent a fair amount of time over my career thinking about like why is this such a big deal? Like, why are people so obsessed about this? Until you buy a house, until you realize just the economic activity that surrounds housing. And while it is it is annoying to be an American in some ways because of this. Like, I was talking to a guy down here. He's moving to Vienna. Um, uh, just happened to run into this guy and strike up a conversation, and he just made a comment. I know that's super random, right? Like, you were talking to a guy moving to Vienna. I was like, yeah, it was random. But he's like, there's buying a home in Europe, for example. Um, he was like, you can't. He's like, there's not like realtors per se, or like there's not like an
Hmm.
MLS, there's not like a Zillow. He's like, everything's private. It's just difficult. And just from the work we've done with clients too, international, if they're living overseas for a time, or have kids overseas, just the market is different. And so I think like our commitment, to housing, and just the importance of housing and the importance of getting this right. And you think about like, who has equity in the housing market? It's older people, right?
Yeah.
Like, it's
Yeah.
people who have just been in their house for 30 years. And like, we know, and we've said this so many times in the newsletter, we've said it so many times. It's like the ticket to financial prosperity is like 360 mortgage payments and 700 401k allocations, which is like, two allocations, two contributions a month over a career, right?
Yeah.
Like, it's not there, the volume is high, but like that's the ticket, right? um but the housing market, like, it's for young people, right? Like, I think the people who have had their homes for a long time, who are sitting on a lot of equity, they're not like, um they're not spending as much money, like getting young people into homes, having extra bedrooms for kids, making it more affordable. That is uh only a good thing, right?
Yeah.
Because I think right now, I think about this, like, I think it's 17 workers. I don't know the data on this right now, because this is probably a couple years old, but as of a few years ago, 17 workers were supporting one Social Security recipient.
Yeah. I think it's around there. Yeah. Still,
Yeah.
or maybe
So
higher.
like, you think about like how important it is for us to get housing right. So that's why, all these bankers and policy members from around the world fly in on their private jets to Jackson Hole, um, to talk about this stuff. Is it really really matters?
Hmm. Yeah. Well, and I mean, it's interesting. Like, let's talk about, maybe let's shift to AI here, because I think this is an interesting segue of like, I think software generally disrupted the traditional business cycle in a way where like some of these like interest rate decisions don't quite matter to the broader economy anymore. Like, you see like manufacturing and all these surveys, and it's like super 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 bearish. Like, manufacturing index is like hitting not lows, but like, not, it's not hitting highs, that's for sure. The Like, those types of things just aren't happening yet. Microsoft is reporting record earnings. Like, who knows what Nvidia is going to come out with in a couple days, but Google and Amazon and whatever else, like, those, I think those businesses, the business model of them, just much more defensible, to where they're not even affected by interest rates because they spin off so much free cash flow. But to a certain extent now, AI is disrupting their business models, because like, so, let's just pick on Salesforce. Salesforce is like the CRM tool, contact management, email marketing, that type of stuff, like relationship management with people, like your clients and prospects. Um, let's just say instead of that, you were able to go on to Claude Code and punch in, make me a a client relationship manager for my team of 5 people. We want these 5 features, XYZ, and then connect it to my Google Cloud account here. And that's pretty generic because I'm not a coder, so I don't exactly know what I'm talking about. But you maybe can hit enter on that, and you have something that's partially functional that would work for your business, and you don't have to pay the $325 a month to get access to Salesforce CRM, which maybe you use 5 of their features out of the hundreds of that they have, right? And so there's like a subtle thing happening, I think, specifically with software companies where maybe they're not quite as needed. The ironic thing here is software created AI. It's just code. AI is just code, and software is just code. Same companies created the same two things, and it's not destroying, it's disrupting the old business.
Yeah. Okay. I want to tie the thread here because I understand what you're saying. So the transition from interest rates to AI. So what you're saying is that like when interest rates are high, that means the economy is good and is trying to slow down, right? So we were talking about like the soft landing, right? Where the Fed needed to was either going to slow the economy down or crash it, right? With interest rate hikes.
Yeah.
And I think what we've all agreed upon is like they did achieve the soft landing, right? But the Fed didn't itself achieve the soft landing. There was like this AI boom and the spending that has gone into figuring AI out at the high levels. Talking about like Google's and Microsoft.
Mm-hmm.
Where like that was a force that almost defied interest rates, and then what's happening now, of course, is like this the software, like the software space itself is getting disrupted by its own creation.
Yeah.
Did I get
Yeah.
that right? And so we'll see if is like, will AI defy the rules of software? Because there's rules, right? Like Moore's law. Like I think computing compounds or gets like it doubles every 18 months or something. That's Moore's law. There's all these like metrics if you start a software company, right? Of like what you should be achieving and what's possible with the internet.
Yeah.
It's a fascinating time. There's an article last week, and you maybe saw this, about how like Meta's been making waves of making these extremely expensive hires. And then
Mm-hmm.
now
Yeah.
last week it was like they're just done, right? But how like the software companies raised the bar on comp on their own, and like the article was like they're just going to kill themselves in a knife fight by just fighting over this talent, raising the bar up, and by doing so they're just going to uh, kill their cash flow by comp.
Yeah. You know
Did you
what's an
see that?
interesting? I did see that they had a hiring freeze on AI. I
Yeah,
mean, it makes sense. How many billions of dollars can you possibly spend in 1 year on talent?
tens of
Because
billions.
I, but how many more can you spend past that, right? I don't
Yeah,
know. You can't just infinitely spend money. I mean, you can and you can't, but um, there's a part of me that I was thinking about this not too long ago. I think I probably graduated college at exactly the right time, just soon enough before AI, and just late enough to where I'm like close enough to like I know exactly how to use most technology. I get a lot of things like um, because nowadays like if you have a kid that's like 14 years old and like what do you want to go to college for, like there's a huge question mark on computer science and computer
yeah,
engineering, and like what could happen there, like maybe there aren't software jobs anymore, or
yeah.
maybe the software jobs that exist are like $300,000 a year senior software engineers, and there's really not a entry level role into that field. um I don't know, it's interesting
And
there.
this is like, going back to this whole like AI, and like in the AI's eating software, the financial markets being you know, the financial markets being disjointed from the broader economy. um that to me is like there really is two worlds. It's like it's a tale of two worlds, where there's the investor economy, and then there's the economy. And I think it's you know, there's again, this was an article over the weekend talking about the tale of the two housing markets, right? Where there's like the lower end of the market that's just been gotten hit really hard with the mortgage, like first time home buyers. And then there's, you know, people, you know, like we've got, you know, somebody just, you know, making a pretty substantial home buy right now, and it's just in cash, figure property just in cash, right? um there's just like there's a tail, there's like almost like a parallel universe right now happening. There's like the economy, and then there's the economy that's driven by the 1%. And it's uh it's real. And you know, like the market's just being driven right now by like five companies doing R&D spending, which is crazy.
Yeah. I mean, there's plenty of other there's more participation, I think, from like a rally perspective this year than there has been. I think like the Russell 1000, which or no, the Russell 2000, sorry, which is a small cap index, has just like done objectively better than it has the last couple of years this year. Not, I don't think it's beating like the S&P yet, but I think there's a little more rally here. But you want to know something interesting here? The VIX, the volatility index, was hitting new year-to-date lows. We went from like hitting high numbers back in April to
Like COVID
hitting,
highs, not quite COVID highs, but like the highest since COVID.
yeah, the highest since COVID,
Gosh.
to now we're like back down to lows, annual lows, like back down to like 2023 lows, to where we were like, oh yeah, these are like smooth sailing here. Nothing's really going on besides like a few bumps in the road.
So I think like people are sort of used to inflation. So I think people like when you think about like what that means, right? So the what happened in the Rose Garden crash, whatever that's going to be called, it'll be called something, right? Like Black Monday in the late '80s. That was a top five market event since in the last 35 years. And the you know, the fact that like 4 months later we're here, not surprised. But it's really I mean, that's what the question right now that everyone's asking in the news right now is like, is AI in a bubble? Because Sam Altman went on and said like AI is probably in a bubble right now. You know, given he was asked about the valuation of OpenAI right now. So I don't want to say investors are sleeping at the wheel necessarily, with the VIX being at it is, but um, the like we know how this ends, right? It's like the VIX will be low, and then all of a sudden it's not, and they'll go
Hmm.
high, and then it'll peak. Everyone will buy, and then it'll go down until it won't. Right? That's the trick.
Yeah,
That's the hard part.
yeah. I think technology has really help people build confidence, because the interesting thing of like that happened in April of this year was the VIX was hitting those highs, the market was hitting, year to date lows. And what happened? Retail investors, just ordinary people, right? People like you, people like me, right? As like my brokerage account is technically a retail account. Same with yours. They came in and they bought. Institutions were still selling, but ordinary people were like, oh no, this is a great opportunity. The market's down 15%, 20%. This is a perfect opportunity for us to put some money to work. And the reason they can do that is because Schwab has an online portal for them where trading is like two buttons clicks. They hit boom, boom, trade, buy Apple stock. Like like there's technology platforms that enable more people to have their hand on the wheel. I think it actually really helps stuff like this, because there's less time to action these days, which can be a bad thing when people want to sell, but it can be a great thing when people are going the other direction.
And that's like, I think what you just said is like, you know, reinforces what I was saying about like the tale of two worlds,
Yeah.
where like there's like what was being proposed like back in April by the administration. I mean, it was like it was a negotiation. So like the like it like that if that happened, like that would have been so bad, right? But at the same time, there's the amount of money that was has been invested in AI. Like what Meta's spending $70 billion on server farms or their own server farms, basically. Like these companies are are almost beyond financial gravity, right? And um, and so yeah, retail investors, they bought in before the pros, and turns out they were right. Good on them to buy the dip. And here we are, fast forward 4 months with the VIX at all time lows. I definitely don't think we're out of the woods though. Like there is a
Oh
lot of
no.
risk, and um, at some point, you know there needs to be some change, right? And obviously, like the administration, I give the Trump administration some kudos here for um buying, really propping up Intel. Like I don't like it does set a strange precedence to me. But they're trying to make inroads here to like make this stuff accessible, like we talked about last week when on the private equity coming to 401ks. Like
Yeah.
sometimes the choice is confusing. Like I think that's one of the problems with AI as like a consumer, right? And even just thinking about like financial advice that's going to be given through AI, like it's going to confuse people. It's helpful, but it's going to be difficult. um so like, is choice good? Yes, but it's also it's confusing. But I definitely don't think we're out of the woods yet.
No, there's definitely opportunity. I mean, there'll always be risk, right?
Hmm.
Is Meta spending too much on AI? Probably. Time will tell. We'll see
Yeah,
whether
right.
we're right or not, right? Is Amazon spending too much? Is Google spending too much? Is FIEL spending too much, right? Like we pay for ChatGPT subscriptions. We have investments, investments at a very, very, very small scale
Yeah.
compared to these. But like what happens, like what's going to happen in a year from now, or like what changes with investment sentiment within businesses, like what changes with software investment, what changes with, there's a lot of question marks, and that always imposes risk, right?
Hmm.
So yeah.
I'm interested to see how this plays out. And what I'm thinking about is like how modern investors are going to be using AI in the coming years, right? One of at the lake in this was in June. One of my family members pulled me aside, and he was like, "Are you nervous about your job?" It's like, "Do you think that AI is going to just take away your job?" And I was like, "No." I was like, for some parts of the market, yes, it will. Um, and it's definitely going to change. Like I think it's going to, um, uh, like working with a financial advisor is going to be different, and people already are working with AI to basically have their own AI financial advisor, if you want to call it that. But life is too complex, right? I was writing about the edition this morning that's being released, and I was just writing about how AI today is basically it has access to all known information, in a book, in on a video, on the internet, right? So it's got like all known information, but like there's thoughts that I have in my head that no one else knows other than me. There's thoughts that you've thought that you are working to make to become true in your life and your financial life that you haven't told anyone other than yourself. And it's impossible for AI to fully understand those thoughts and the context behind those. And even just like a simple text conversation with AI is not going to it's not AI is not human. It's not a sentient being, and that's where I think the um, where this is all going is like AI is going to be helpful. It's going to continue to drive the market because I think we can all see it's going to disrupt software. There's going to be some catastrophic losses, I think, in the public markets from some of these old guards. What's happening in Intel, and it's going to fuel new, really new horizons for individual investors, for companies, little companies like Fiel. So
It's good to remember that AI is just code.
yeah, totally.
Yeah.
We've like, even with ChatGPT 5 that being released, it was supposedly like, that was such an like underwhelming experience for me. And I know we talked about this, but I think that just solidified in my fact, or like, I think I was on this like personal journey with AI of like, it is going to be so good. Like, it will be so good. Like, it will be able to solve, I don't want to say like solve all my problems, but like, I think I'm at the point now with it where I understand its limitations and it's severe. And I think I know its place in my life. Do you?
Yeah. I would say more so. Yeah. It can help you make great decisions. It can also help you make horrible decisions.
Yes.
The thing I've learned with
Yes.
ChatGPT, it's very biased to what you think is right, whether it's
One
actually
day
right or not. Yeah.
one day it's one thing, the next day it can be the next thing. And so I think from the investment perspective, right? It's like, if that's where like the consumers, like we're just using it as consumers, like consumer first, and then like within the business, it really, like AI hasn't really trickled down into actual like um and there's been studies released already on just like the impacts of AI in business, and it's not that great. Native AI companies are doing really well right now, but like your neighborhood, like plumbing company, like they might use AI, but it's not like making their business 5 times more profitable. There's like not really really any material benefit at this point in time. Um, so that to me is like a sign of like, okay, the market's, could be a little over its skis right now.
Hmm. Yeah. Well, I know you got to get going here, but I think that's a great,
Great way to end it.
yeah, a great way to end it. Yeah.
All right. Well, hey, thank you everyone for tuning into this week's show. If you wouldn't mind liking and subscribing to the YouTube channel here, that would help us out a bunch. Jacob, thank you for your time here. I'm going to get back to my family and enjoy the rest of our day. We'll see you guys next week on the Wealth Workshop podcast.